Good morning, ladies and gentlemen. This is Precise Financial Systems, and we want to welcome you to this very, very, very special session.
Pleasure.
Deputy Managing Director. And with me to anchor this program is our ladies, our Iron Lady here, Omolara. Omolara, can you say hi to our audience?
Good morning, everyone.
Good morning, thank you. So, Lara, over to you.
Okay. Once again, welcome everyone to the second edition of this webinar. And we believe that this conversation is going to be very interesting. And today, we are looking at data quality in accounts reconciliation, and we have quite a number of items under this topic. So now, the first thing we're going to be discussing will be data. So, Mr. Obalakunsa, I would like you to explain to us what data means in the light of its relevance to accounts reconciliation.
Okay, yeah, thank you, Lara. Since the invention of computer, people refer to data as information stored on computer systems, either in bytes, bits, but data is beyond information stored on computer. Data is any information that is stored, can be recorded on paper, can be recorded on system in a way that is readable by anybody. It must be readable, it must be clear, it must be clean. For you to say you have a proper data when it comes to accounting or when it comes to the issue of reconciliation. Data comes in various forms. It can be qualitative and it can be quantitative. But what we are looking at when it comes to accounting is the quantitative data, not the qualitative, whether it is beautiful or whether it is ugly. So we're talking of quantitative data, which is numeric and which can be subjected to further analysis and interpretation. That's what I understand, or that's what we understand when we talk of data in accounting. Something that is recorded, either electronically or manually, clear, can be read by anybody, and can be subjected to further analysis. In simple definition, that's what a data is.
Okay, thank you, sir. So with respect to reconciliation, you just mentioned that we are looking at quantitative data, which is numeric and is subject to further interpretation. Okay, Mr. Dabiri, sir, do you have further input on what Mr. Obalakun has just explained to us?
No, just to make good morning, ladies and gentlemen, and thanks for having me here, the PFS team. Just to mention that data is the new gold, is the new oil. So, I mean, everybody talks about data, and data is the main thing now. Without data, you can't do anything, be it reconciliation, be it analytics, predicting the future, you need data for that. So without data, you can't do anything in the world. So, but restricting it to reconciliation, yeah, data is the main ingredient for reconciliation. That's about all I have for that. Thanks.
Okay. Okay. Thank you, sir. Thank you for that input. And so, once again, the theme of this webinar is data quality in accounts reconciliation. And the question is, are we cooking books? And so, right now, I will move to the next item, which is data sources. And this, I'll be asking Mr. Dabiri the next question. We are aware that there are different sources of data associated with different types of reconciliation. Sir, could you please enlighten us on these sources with respect to account reconciliation?
Okay, thank you very much again, Lara. As we have rightly mentioned at the beginning, data is the source of everything. Now, talking about bringing it home to reconciliation, we know what reconciliation is. Basically, it means, comparing two things. You can't reconcile only one thing. It has to be two things. And there are different types of reconciliation, but I'll just try and focus on a few in the interest of time. We can start with the bank reconciliation that we are all used to. I'm sure that is a reconciliation 101 for everybody. Everybody has a bank account, and then you want to reconcile what has happened, be you individual, be you company, be you small and medium enterprise. You need to reconcile your bank accounts, basically. So that is very key. So that bank reconciliation is, a very important reconciliation worldwide, basically. And then when we talk about bank reconciliation, what are the sources? Now, as we said before, we are comparing two sources. We are comparing two pieces of information. The one from the bank and the one you are keeping. That is what we are going to reconcile. So when we talk about sources, for example, bank reconciliation, we need to look at if you're a company, maybe your general ledger where you store your cash book and all the rest. And then you look at the account statement that your bank has sent to you. This might be physical, hard copy, but nowadays everything is in soft copy. So we would have these two. So that is an important one for everybody. And I believe that everybody does their reconciliation, bank reconciliation, because some people even do it on the go right now. Where you have your alerts coming in and everything, you quickly reconcile with what you have in your book. So again, that is very, very important, and starting with that. Now, just taking it further again, just to, for corporate entities or, say big banks or something like that, where most of the things are automated, we have what you call the Vostro accounts, which are local accounts, and you have the Nostro accounts. For the Vostro accounts, as I said, you look at your bank statement and you look at your in-house GL. For the Nostro, most people use SWIFT and all the rest. That is, when you say Nostro, it means the account that you have offshore, not in Nigeria. Definitely, most people use SWIFT. So what are the sources of data for this information is your SWIFT statement. We call it MT940 or MT941 or something like that. And then you compare it with your in-house GL, which by the time you are passing entries, by the time you are transferring money, by the time you are receiving money, you are recording in your core banking system or in your in-house GL. So those are the two types of sources that you have in terms of Nostro reconciliation. We can just push it further again. We given the reality of what is happening in Nigeria or in the whole world in terms of e-business, e-channels, everything is e. We can imagine what happened during the COVID era where anybody could go out. All you were doing was either mobile banking, web banking, USSD, and all the rest. All these things need to be reconciled as well. Again, coming back home, what are the sources? There are different sources. Sources, again, your in-house GL or your core banking solution, and then the external report that you get from these switches. We call them switches, probably NIBS or probably InterSwitch and all the rest. Those are switches. So they send a settlement report to you, which you use to reconcile, to make sure that everything is well accounted for. Quickly going on to ATM reconciliation, which is key again. Everybody goes to the ATM to go and withdraw cash and everything. Reconciliation happens here as well. Yes. And this day, you might even have what we call a three-way reconciliation. You are talking about the cash in-house, you are talking about the postilion, and you are talking about your ATM journals. All you are trying to do is to compare and ensure that you are on the right track. Well, lastly, there are still other ones, but lastly, I'll talk about the IMTOs, that is the money transfer and all those things, MoneyGram, another things that we can really relate with. Again, reconciliation happens here. When you have paid money out, you are receiving money from somebody to reimburse you, receivable and payable. These are different data sources as well. So I just tried to highlight a few. In the interest of time, I'll stop here.
Thank you, sir. You have really broken down, the data sources. You've mentioned that, yes, reconciliation is between your internal record and your external statement. And the external statement depends on the kind of reconciliation you're doing. So if it is Nostro, which is for foreign operations, you are reconciling your GL, against Swift reports, which could be your MT 950 or any other kind of MT. And if it's for e-business, it's going to be your internal record against the switch report and so on. Thank you. Mr. Walakusa, do you have further inputs on what Mr. Labi has just mentioned?
Yes. Thank you, Latif. Thank you, Molara. I'll just add this. Data sources are basically two, the primary and the secondary. As Latif has said, the primary data is your internal data, and the secondary data is what you get from outside. And I want to expand this frontier of reconciliation. The reconciliation goes beyond bank statement on the bank reconciliation only. Wherever you have two sets of data, one primary, one internal. Even internal, if you have two internal sources of document, and you need to reconcile them. Reconciliation means matching two records to agree and identify what is not matching there. So I want to say that reconciliation goes beyond only bank statement, only banking transactions. But in every case, you have the primary data and you have the secondary data, and the two of them must be brought together. Thank you.
Thank you for that explanation.
Yeah, Omolara, if I may also come in and say, hello. Yes, I may also come in and say that what Mr. Balakun has said is that at times you have some special accounts that both sides of the books actually reside within the organization. And I'm very sure we have some accounts that are self-reconciling, especially where you reconcile a set of debits against, credit, suspense. It's also accounts reconciliation, but doesn't require any external data inputs. Thank you very much, Mr. Balakun. We enjoyed it. Thank you very much. Lara, over to you.
Okay, thank you, Mr. Eni, for that input. And so that takes us to the next item. And don't forget that we are discussing data quality in accounts reconciliation. Data quality. Now, with respect to data gathering or amalgamation, Mr. Balakun, this is for you, sir. We've seen scenarios where there is need to combine data from different sources in order to carry out the reconciliation exercise. Yes, Mr. Labi has mentioned earlier that in most scenarios, you're reconciling your internal statement against your external statement. But there are circumstances that demand that data, sources are merged. Can you please shed more light on this scenario, sir?
Okay. Let me put this way. Data collection or data gathering. That's the process of bringing together information or data from two different sources, primary, secondary, or even two different sources internally, bringing them together in a measurable way to identify some goals. You see, data gathering is not just done for the fun of it. There's an end in sight before we commence data gathering. But this data gathering must be done in a methodical way, in such a way that you are bringing together like with like. You're not bringing orange to compare with apple. So it must be done in a methodical way, in a measurable way, so that decisions can be taken by the management or by the user or by whoever has given directive that gathering should be done. Data gathering can be done through various means. It can be done by visual observation, in which case you are looking at two manual records. It can be done electronically, in which case there's minimal human intervention, that systems take over data gathering and amalgamation. But it's very important that when you are doing data gathering and amalgamation, you are bringing like with like. You are gathering like with like. If you want lemonade, you must have lemon. If you combine lemon, if you gather lemon and apple, you are going to have a smoothie, not lemonade. So the process is as important as the data. So the process ensures a very good process ensures that, well, you are bringing like I said, like bringing like with like, and it ensures that nothing is left out. And I'm sure as we go in this webinar, we will see the default or the strength of visual observation, in which case you are looking at manual record, and maybe you are ticking to say, okay, this is there, this is here, or whether electronic, in which case you surrender it to electronic, to electronic device, which does the machine, the gathering automatically. So thank you. So the process could be manual, the process could be automated. But the most important thing is that you are bringing like with like. And the end, and the purpose is that there must be a result, a report that's generated after the machine. Thank you.
Thank you, sir. Over to you, Mr. Dabiri. Would you like to give us examples of scenarios where our data sources are matched before reconciliation exercise can take place?
Sorry, I didn't get that.
Can you hear me now, sir?
Yes.
I said that, would you like to share with us a few examples, situations or scenarios where data sources are merged before reconciliation exercise, can take place?
Okay. Yes. A scenario again. I would lean a bit on the financial side. Given my background and everything. So excuse me if I lean more on the financial side, not covering the whole thing. Basically, again, I'll go back to a very key one, which is the Nostro reconciliation. You have your statement MT941. In the MT941, which is supposed to be all your credits and debits for that day and all the rest, there you might not have a complete information or the complete unique reference. You might need to have what you call additional advice, which is, I think, is MT103 or something like that. In that case, you need to combine the 103 and the 941 to actually compare it with your own in-house records. So that is a situation where that happens, basically. And as Mr. Balakman said, the whole essence is comparing apple with apple and not apple with oranges, basically, because once you go wrong there, then there's a problem there. So thanks.
Okay.
Okay, Lara, let me add something, please.
Okay, sir. Mr. Balakman, you can.
Yes. You see, in gathering data and matching data, you can have situations of where you have one-to-one, in which case you have one entry here, matching one entry in the other one. You can have a situation of one-to-many, in which case you have one entry in one set of books, but there are many entries in the other set of books to tie up to that one. And you can have many-to-many. That is, there are many transactions making up one, there are many entries making up one transaction in one book, and many transactions making up one transaction, many entries making up one transaction in another book. So those are the scenarios when it comes to gathering and amalgamation of data. One must be very careful to ensure that you have taken every entry that matches the other one in the other book. Thank you.
Yeah, thank you, sir. You want to say something?
Yes, thank you very much, Omolara. I think there are other situations where you have a scenario of combining books together to actually have a complete set of transactions. And we are not talking about the transactions themselves now being splitted into multiple entries. What we are talking about the source books. You could have a situation, basically what you expect is two books, one internal, one external, and then you combine. And from what Mr. Dabiri had explained, he has explained a situation of multiple statements when he mentioned MT 103 or 102 plus MT 950, 940 being combined together. And at times you could have books, that is multiple books external. At times you have some, due to some reasons best known to some organizations, they do have a situation whereby they have to combine one or two records, books, in their own in-house accounting system or banking system to reconcile against one bank statement. For any special reasons, we are not discussing that now. So you could have a situation of one book external against one book internal, multiple external against one internal, and multiple internal against one external. So you have all those scenarios too that are practically on ground. Thank you very much, Omolara.
Well, thank you for that input, sir. And let's move on to data validation. And Mr. Dabiri, this is for you, sir. Can you please explain data validation and why it is necessary in accounts reconciliation. Can you hear me, sir?
Yeah, I can hear you. Thank you very much, Omolara. Again, this is one of the core pillars of reconciliation. And I think I need to emphasize it, and it cannot be overemphasized. I know the topic that we're dealing with is, are we cooking books? You know, I mean, and that's one of the things. So this is where the cooking can really happen, you know, in those words, basically. Now, what is data validation? Essentially, data validation is making sure that the data you have is actually correct. You would have an opening balance and you'd have a closing balance. And between these opening and closing balances, you have transactions, because it's transactions that change the opening balance. So first of all, the opening balance must be reconciled well, that is, it's correct. You must make sure it's valid and it's correct. Then you now look at the sum total of all the transactions that happened. You now merge that with the opening balance. So you should get a closing balance. So ab initio, you need to validate what you are reconciling. If there are differences there, for example, if the transactions are missing, or if they are not complete, or if they are more than, you are already having a reconciliation balance. Your book can never be balanced. So in terms of data validation, this is one of the most important things around reconciliation. You need to validate this data. You need to validate this data. Yes, you are gathering it from different sources and everything, but you must validate this data before you reconcile, or else you are going to go into serious trouble. So this cannot be overemphasized. I know, I mean, as we progress with the program, we're still going to talk in terms of the RegTech and the automation and everything. But reconciliation 101, you must validate this data. Validate it before commencing reconciliation, because it defeats the whole purpose. If you go ahead and start the commence the reconciliation and there are missing transactions, you've gotten it wrong in the first instance, or the closing balance is not even correct, or you have an issue with discrepancy with the opening balance. So it's the whole essence is to make sure that you are doing reconciliation correctly. So those are my few comments on that. I think other colleagues would have a few things to say around that as well.
Thank you, sir. Mr. Obalaku, sir, do you have further inputs?
Just a little addition. For me, data validation is data cleansing. Remember when the computer system started in Nigeria, we have this terminology that we call a GIGO, garbage in, garbage out. So data validation is ensuring that data that goes into the process is clean ab initio. Otherwise, the end result from the reconciliation, and remember that balances and transactions go hand in hand in reconciliation, in account reconciliation. Just like Mr. Barry has explained, the opening balance with transactions should give you the closing balance. In between those two times, the opening balance and the closing balance, transactions are coming. Anything could have happened to those transactions. That's where it is between the opening balance and closing balance that if there's going to be any cooking, that's where the pot will be placed, and then the cooking will be done. And at the end of the day, you can have a balance that is either a forced balance. I'm not talking of forced balance. I'm talking of a forced balance, where the concession can be forced to balance. So validation is very essential. Cleansing is very essential. Thank you.
Thank you, sir. Mr. Eni, do you want to chip in something?
Yes, I want to say that what would you say about some other organizations, those that are doing some testing of some automation, although we're going to get there, automation of account reconciliation tool, and they will tell you that they are doing some testing, and the only thing they are validating is just to knock off transactions. That Would
I'm sorry, I don't know
you
whether it's my
say
network. Can anybody, it appears the network is breaking.
I think it's Mr. Yeni's network.
Please let him know that that his network is breaking. Sorry, Mr. Yeni, your network has been breaking. We couldn't hear what you said.
Okay, Mr. Oh, okay,
Mr. Yeni.
okay. What? Can you hear me now?
Yes,
Yes, better now.
Okay, fine. I'm talking about you have a situation whereby some people, some organizations will claim that they are doing some testing of some account reconciliation tools. And while they are doing the testing, all that they do is to look at knocking off transactions without talking about balances validation. Will you say that such testing of automation of account tool is actually adequate without balances validation, Mr. Dabiri?
Yeah, thanks, Mr. Yeni. I would not subscribe to that. I mean, that's again, I go back to reconciliation 101, basically. You need to validate both. You need to validate the opening, you need to validate the transactions, you need to validate the closing balance. That would just be some form of, I think we used to call it dirty matching and all the rest in those days, basically. And then you are just guessing. Something could have happened to somebody, could have tampered with those balances. It's not what you close with that you're opening with. So you need to have all those things into consideration as well. So I will not subscribe to just reviewing only the transactions and not looking at the balances. And that's basic accounting.
Thank you.
Okay, so what I've learned from this is that in order not to cook books, data validation is mandatory. That's just something, it's mandatory. Thank you for that. And okay, Mr. Balakusa,
Yes,
a reconciliation exercise, do we have such things as standard narrations? I want you to answer that first. And if we do, how do we ensure that our data have good narrations or references that will enhance reconciliation?
Excellent. I think standard narration is what we also call transaction coding. Transaction coding has three parts. Yeah, it has the subject, it has the object, and it has the identifier, the unique identifier. You see, if we don't have standardized narration that is consistent, that is clear, and that is applied, and that is unique, in any case, we are going to have mismatching. You see, in reconciliation, that's something we call matching rules. It is our transaction coding that we bring into our matching rules, that we are saying that match exactly. Let's say that in our ledger we have payment to, there's an item, 5,000 naira. Payment to Latif Dabiri. On the bank statement, I should be able to have payment to Latif Dabiri, 5,000. If I have payment to Latif Dabiri in my ledger, and I just have payment in the bank statement, 5,000 naira, there could be various payments of 5,000 naira to different people. So what you're saying is that it must be unique and it must be standardized. Standardized in the sense that you don't leave it to the person posting to type the narration that he or she likes. The narration must have been standardized and built into the system. There is a system set up so that once the person is posting, he just needs to pick a code. And once that code is picked, the narration comes out clearly. Because when you leave it to the discretion of the person handling the posting, depending on the mood, in fact, anything can happen. I remember I said that for reconciliation to be properly done, there must be standard narratives that must be consistent, that must be unique, that must be clear, where there's an identifier There's a subject and there's an object that's receiving the transaction. Thank you.
Thank you, Mr. Obalakun. Mr. Dabri, do you want to give further input on what you have just explained?
Yes, please. Thank you very much, Lara, and thank you, Mr. Obalakun. Again, this is one of the fundamentals of reconciliation, whether it is account or anything anywhere. This is the fundamental of reconciliation, as he has rightly mentioned. If you cannot tie the two things together, it becomes a problem. That is, you now start thinking you are comparing orange with apple. This is very fundamental. I know in the past, when we didn't have systems and everything, we used to use value dates and amount sometimes, and a transaction type. Of course, that is what is called dirty matching. You can't get it right. There'll be some mistakes there. There'll be the same dates and the same amounts that will come into consideration. It has happened. It has happened, and we have seen it live before. So, as he has rightly mentioned, this is one of the fundamentals of account reconciliation, unique identifier. If you can't get it right, you have a problem. You will be mismatching. And this applies especially on the electronic channels, where you are sending money out. A switch is going to get it, and definitely you must ensure that you are having the same transaction code or transaction number, so that when the thing comes, you can identify it and match it correctly. If you have a different code, they have a different code, then you can't even do the reconciliation properly. So again, we cannot overemphasize this. A unique identifier is key, fundamental in any form of reconciliation that we're going to do. That's my comment. Thanks.
Yeah. Thank you, sir. Mr. Ayeni,
yes, I just want to add that, because there's this question about how the accounting system of our core banking system can actually help us enforce these rules. Okay, Mr. Dabiri, I know, for instance, you will have your front end on your core banking system where there is what you call, cash withdrawal, which is like a general description of that particular type of transaction on the core account system. And then some details about the voucher, teller, the ID of the customer, blah, 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 are also needed. That isn't there a way that the accounting system, the core banking system, will be able to enforce the input of some unique identifier of that transaction before that transaction will leave the date of a particular teller, of the particular teller?
Yeah, thanks, Mr. Ayeni. Very important. Well, at least from my experience in the industry, is
yes,
in terms of flexibility. People have been left to, is this a matter of coding and all the rest? So in the past, this was not being enforced. But when banks or when institutions ran into problem where institutions were collapsing because of unreconciled figures, large unreconciled figures, I can tell you for free that we have seen institutions that collapse because of unreconciled figures, unreconciled accounts and everything. We have seen it in this industry. So now everybody is mandating the core banking to ensure that there are some basic things that are captured at the posting level, because once you get it wrong is where you are inputting the information. Once you get it wrong at that level, then it becomes very difficult to retract, as Philip has said. So right now, apart from having codes and all the rest that have been standardized, we are now enforcing the core banking system, the way they are being built now. They are now enforcing to have some minimal level of information that before the transaction will be passed, before the entry will be passed. If you don't put those things, the entry will not be passed. So it is possible and it is happening. We just need to continue to reinforce it, that it continues to happen.
So what it means is that if it is being done, the enforcement of standards is being done on the core banking, it means that it should also be done on typical accounting system for non-banks. Isn't that what you're also saying?
Exactly. It's for everybody. It is universal. It's not only in banks that they do reconciliation. Companies too do reconciliation. And as you rightly mentioned, they could even be reconciling stock. It's possible. It's not only money that they are. No, as Mr. Balagu said, once it's primary source and secondary source. So you can reconcile anything. It could be stock that they are even reconciling. So this thing is very, very important in all industry, in all spheres. Once you are reconciling, this is an essential ingredient of reconciliation. Let's put it that way. Without ingredients, you would not have a good reconciliation system or a good reconciliation output at the end of the day. And in that process, people buy hide things inside. Where you have the largest number of fraud is on reconciled accounts. That's it. That's
okay. Okay, to also extend it a little, not to complicate it, but also to extend, and you also have a scenario whereby some organizations, apart from their core accounting system or core banking, they could probably have some specialized services they render, and then they have some specialized application software that actually do the process, the transactions processing. And then at the end of the day, at regular interval, they upload from this satellite business application into their core application. So what you're also saying is that whatever validation that is required on their core banking system or core accounting system should also be extended to those satellite business applications, that they have also come up with to process certain specialized services they render to the public. I think it's also extended to that light. I wouldn't know whether you agree with that submission.
I agree with you completely. And as Mr. Balaku said, it's garbage in, garbage out. If you are importing garbage from the third-party system, there is no way. I mean, even if you take it to your core, the biggest core banking, you are importing garbage. So at that point in time, you need to do some level of validation and reconciliation, and you have control here and there, controller accounts and all those things. They should be put in place. So I agree with you. Those third-party applications too need to have some validation in place, and to make sure that this basic ingredient, I repeat, basic ingredient of reconciliation is available.
Okay,
that's it.
Sorry, because I can say, sorry, Lara, I'm not taking over, please. I'm only trying to.
Right.
And I've also seen a situation whereby you are from a scenario, just an extension of this third-party stuff, where you have some details being kept in some external applications, keeping details of some things, and then you have a kind of external records that keep, some like settlements, so to speak. So in such external transactions, you will see only the settlement figures, and then the details of these settlement figures will also come from another source. So what we are saying is that either you are looking at your internal records, okay, for business application that you upload to the core banking or core accounting system, or external transactions, whereby you have a settlement figure in your external records transaction, and then you also have the breakdown of the, like your cards, the streets, messages of all these that are settlements, foreign transaction settlements, and then the rest, that these validations are actually very, very necessary. Is that what you are saying?
Yes, exactly. You have taken the words out of my mouth, basically. And again, I can tell you, as you rightly said, this was a problem we experienced when e-business or e-channel operations started some time ago, that we, in terms of reconciling, we couldn't get the breakdown. But the switches and all the switches and everything that we now have, have been able to crack that. I can tell you that almost all the payment platforms have been able to crack now that, yes, they'll give you a bulk figure, but they will give you a settlement report which details out each transaction one by one, each product one by one, each customer one by one, so which helps you in your own in-house reconciliation process as well. So I think this is happening now. This is happening, but we just need to ensure that it's been done, and we don't go back to what we had in the past. Because I know it took a while for all these things to be in place. In terms of the most difficult area was reconciling the e-business operation, given the volume. It's a volume stuff. It's a volume. It's very high volume, and a lot of transactions happening in seconds and everything all over the world. From all over the world, where that's where you get the transaction. So again, that's very important. Thank you.
Yeah, I have another scenario, but I will keep that for now. And if there's time towards the end, I think I will bring it forward.
Okay, yeah, Mr. Yeni.
Yes,
yeah, Mr. Yeni. Mr. Yeni, sorry. Yeah. I want to say something here. You see, this issue of information flowing from satellite applications into the core banking application or core general ledger.
Yes.
See, from data migration and data conversion program.
Yes.
Of the satellite applications now, to use your word,
yes.
Applications now. It's essential that the formats of the information in the satellite application is the same with the format of the information in the core banking application or the ERP, the enterprise resource planning.
Correct.
So the data migration and data conversion must be the same. The format must be the same. There must be no difference. Otherwise, there will be issues when it comes to reconciliation. Thank you.
Thank you. Great. Thank you, sir.
Okay. Thank you all for the valuable contribution. And so the last question on this session goes to Mr. Dabiri. Can you please explain to us, sir, the role that automation has played in accounts reconciliation in recent times?
Thank you very much, Lara. I think I just hinged on it in my last discussion in terms of given, again, what is happening now. The whole business has shifted from, let's say, manual and cash and everything now to electronic payments. That is the vision. And that is what is happening. There is a payment system vision that we have in Nigeria, which has been continuously being updated by CBN. 2020 is now, I think, I'm not sure which year we now have it now. And if you look at the volume of the transactions and even the value now, everything has moved to electronic, everything is E right now. Now, we've talked about the volume before. How is it possible for you to start the reconciliation without a tool? That is human being to sit down and be reconciling the two accounts and be knocking them that, okay, this is the MT940 and this is the internal GL. How is it possible if you have 1,000,001 transactions done by institutions worldwide? Everything is E right now. It's almost impossible. So it's business driven. That is why automation has come, and then you cannot overemphasize it. And that is what is happening. Is basic. I think we started it thanks to the likes of PFS. I think I need to commend them at this area. They started it at least here for us in Nigeria a long time ago. In the late 90s, early 90s, and everything that they started it, where we can do some form of reconciliation using automated tools, basically. So without much ado, what I want to say is that is the way. Nobody, I can tell you, nobody is doing any reconciliation manually again. Yes, they can do rule of the thumb and everything with Excel and everything. That is even a level of automation, but it's not that accurate. So you need a tool specifically designed for reconciliation. And we have told you the different types of reconciliation happening. It's very diverse. It's not just one type. It cuts across industry. You are even reconciling stock. You are reconciling people. You are doing data analytics and you are reconciling things and you are predicting what is going to happen. So now you can't do anything without automation. So it cannot be overemphasized that doing all these things, yes, you should take the principles that we have talked about, coding, coding, validation, and then it will do that. But it can be done automatically. That is electronic, reconciliation. So this is a very important thing. That is where the world is going. At some point in time of the world, you now start looking at artificial intelligence and all the rest. But that is machine learning and everything. So, that's where it's going. Robots and everything is all in the mix. It's all automation, basically. So I want to thank you guys. This, you need to promote this to the highest level in terms of people automating what they are doing, because the people that are doing it manually, I can tell them for sure, without any means of words, that I'm sure they are missing some things out. They are not reconciling properly. Something is hidden somewhere. They must have just overlooked it. But with the machine and everything, you can't miss it. It doesn't go to sleep. It's based on the facts. Once you do the validation, you do the coding, it brings it out. And it doesn't, compromise and all the rest. It will look at your face to say, no, you will pass this entry. No, you will not reconcile this. You will avoid this. So just to emphasize that, that's the way forward. And thanks to you guys that you are pioneering it. Please keep it up.
Thank you, sir.
Comments for that, yeah.
Thank you, sir. Mr. Barako, what is the further inputs on what Mr. Dabiri has just explained?
Okay. Thank you, Lara. Thank you, Latif. Now, let me add this. Let's see what were the problems we had when we didn't have automated reconciliation. Number one, you have the problem of human fatigue. Like Latif has said, if you are reconciling thousands of figures, and one man is looking at in one book and look at the other set of book, he's looking from the left to the right and it's ticking. After some time, fatigue sets in, and the person begins to tick the wrong figures. Number two, because of the volume of transactions, what we had that time was the best most organizations had was to do the concession once in a month. And unfortunately, for those that are even able to do once in a month, they are lucky. But before the end of the month, a lot of things could have happened.
Exactly.
And because we do it once in a month and the volume of transaction has gone up, the concession falls into arrears.
Yes.
So you now have the concession fall into arrears 3 months, 4 months. And within that time, somebody has committed fraud and has left the system. It's gone. So what automation does is that it helps us to identify areas of errors or attract fraud on time so that we can take prompt action. Let me also bring out another point. When we're doing the semi-manual, what I call semi-manual or semi-auto, where you download onto Excel and then you now match Excel to Excel. You know what was happening that time? Because we said transactions and balances must move hand in hand earlier on, right? So some people, just because they want to force that balance, that closing balance, to agree with what they have in the books, there could be suppression of figures, where figures are eliminated in the matching process. Manually, that's human intervention. Automation eliminates suppression of figures. It eliminates human intervention. It eliminates human fatigue. The people handling the concession are better off because they can do the concession at the click of a button and then move on to better things to do either with their life or even for the organization. And automation has also brought down overhead. At the beginning, maybe at the time you are automating, the cost might be prohibitive. Might say, this cost is too expensive. But over time, it brings down your cost of operation because you can now reduce the number of people who are doing the concession and move them to other areas where there are needs. Thank you.
Yeah, thank you very much, Mr. Barako. Thank you very much. Actually, to even shed more light, we see that if you don't want to cook books, that means that the process of validating your balances, bringing in your transactions, and ensuring that the sanctity of your transactions is maintained throughout the process of reconciliation, you actually need automation. The more you leave all those things to the hands of human beings, the more you are exposed to a scenario whereby people will begin to substitute transactions. People may begin to manipulate details of transactions and even changing figures At times, they may even bring in transactions multiple times as outstanding, whereas those transactions are not even outstanding. Okay, part of the automation, we also ensure that, oh yes, there's transparency, there's openness. You can see the transactions as they have come in, as they have been matched, and as they have been archived straight away onto the system, depending on the disposition of various organizations towards control issues within the organization. And of course, when there's sanctity of those transactions, there may probably be some need for further analysis of your transactions. You are under a manual setting, the only thing you have is a list of outstanding items. That's the best you do have. And what about other items like age analysis, other analysis, and then the rest? Ability to change the frequency of your reconciliation. Just as Mr. Obala said, that you have once a month scenario, to do your reconciliation on a daily basis, depending on the risk factor attached to a particular, a particular account being reconciled. I want to thank you very much, for those inputs. And then lastly, the question that I was trying to, shelve the other time in terms of data validation. Mr. Dabiri, I would like you to chip in something in this scenario. We have this, especially for banks. We have a situation whereby some banks in their books, we create a particular account. Okay, especially when you have third party like card, somebody having a debit card, a foreign account card, and then goes abroad to do a particular transaction in maybe euro, and then the settlement comes into in dollar, and then the rest. Meanwhile, the books are kept in the core banking as a Naira account. I wouldn't know whether you understand that scenario. How can you say that the data that you are going to get in such scenario will be good enough, will meet your data quality as we have expressed in this particular session? Let me recap. You have a dollar account, a dollar domiciliary account, okay, and you've done some transactions, gone abroad, and you have your FX, and then you have the statement coming in dollar. And okay, let's say assume you have a Naira account. You do have a Naira account, and with your card, you've done some transactions abroad. So your transaction will come back in through the settlement in dollars. Okay. Meanwhile, the transaction currency is probably in pound sterling or some euros abroad. Okay. And your account has been debited here in Naira. So you are going to credit a corresponding account here. We think that such a scenario should have been a multi-currency scenario, whereby the Naira account of the customer here is debited in Naira with the charges and the credit reflecting what the statement will have. But what we have noticed is that you have some banks, the credit leg is also kept in Naira, whereas the mirroring account is coming in settlement account, which is predominantly in dollar account. How would you describe this scenario as effective enough for data quality that is actually required for accounts reconciliation? I wouldn't know, Mr. Dabiri, whether you got that scenario well.
Yes, Mr. I got that scenario, and I would, I would not know why you would want to, or the institution would want to complicate things for itself instead of having those various currencies open, basically. But my guess is that, well, again, there'll be a unique reference which they'll be able to use to match those accounts. And at the point it's happening, probably they would have agreed, with the correspondent bank or with the switch or something in terms of the dollar exchange. If they have maintained only dollar, so they would have, they would have maintained. Probably the switch will be advising them of a daily rate which they'll be using to convert. So they will have an arrangement in place. Either they're going to use a forward rate or they have a rate, to ensure that this is converted at the rate that they are converting here as well. But I mean, it's a complicated way. There is no need for them to do that. They can just simply do the right thing in terms of, again, let's match oranges with oranges, because now you are trying to match orange with lemon or lemonade. Yes, naira, dollar, and then the third currency, where the third currency is happening. So it would be advisable for them to have those currencies. And if they don't have those currencies, they can have a fixed arrangement in terms of what the dollar rate will be on a daily basis. So they would have known the dollar rate, which they would use to reconcile in their books in Nigeria as well. They would have known that, look, they are charged the dollar rate they're using, that is from pounds to dollar, the third currency rate is this amount, so that they'll be able to match it with what they have in Nigeria. But the ideal thing would have been for them to have different currencies for those transactions. That's my 1 pence.
Yes, thank you very much. That's just to bring that into the fold, that there is this challenge in that light. And sometimes as we go along in this particular program, we'll be coming up with full discussions about that. The framing, setting up of accounts, matching accounts, currency for currency, account type for account type to aid reconciliation. That will be another topic for another day. I want to thank Mr. Obalakun, Atonda Obalakun, for the program, for coming, and I'm very sure the audience had actually enjoyed your inputs. Same for our dear friend Latif Dabiri, friend of the house. Lara, I also want to thank you very much for a job well done. Iron Lady in house here, very much. I also want to let you know that at any point in time, please feel free to get in touch with us. You can see, get to our website. You want us to do anything for you, want us to be involved in some of the things that you are contemplating of doing, FOC, Pro Bono, will be glad to engage your team. Just to ensure that the standards are the highest level possible within your own environment. Our next edition is coming up in June 16, to be precise, June 16. I'm going to have two veterans too, and one coming from Ghana and one from Nigeria here. It's going to be strictly for bankers, and the title is ATM and EFT product reconciliation. Looking at ATM there and EFT is going to be explosive. It's going to be explosive. We have so much that our discussants will have to throw lights on. And then if there are issues that we cannot resolve in one session, the rest assured, we'll push it to another session. I want to thank you very much. Our time is up. It's 1 hour, exactly 1 hour. Thank you very much. And for those of us at the back room, GD and then the rest, and Wale, I want to say a very big thank you for keeping us in good shape throughout the program. Thank you very much. I'll see you next edition. Bye for now.
Thank you very much.
So much.
Thanks for having me. Bye.
Bye-bye.